Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, we're just going to do a brief overview of the market. Of course, you can just see that sea of red on the board. Everything is having a pullback after that nice little mini bull run that we had. Of course, it was just a relief rally, and if there's more to come, that's not 100% clear. We have a lot of things going on in the market, but you do see some of our favorite coins taking a pretty big hits. Nothing too serious. We're all in the 5 to 20% range typically, and I would say probably the average is around 10%. So far holding up okay, but of course, if the market does dip a little bit more, these will be becoming very serious pullbacks. Today we had the Chicago Fed measuring national activity, and it just came in basically on par with their last measurement. So that's just kind of a moot point. In the case of tomorrow, we actually get new home sales and the consumer confidence index. So we can see if people are, buying homes and just how confident consumers are feeling. I suspect that may be down a little bit more than what they're targeting here, but we can see. And also we can see if there's a little bit of softening in the home sales market, which it the expectation is that it does take a dip. But there are a lot of people actually projecting pretty big doom for the housing market if the current setup in the macroeconomics continues. It's going to put a lot of stress on homes and housing, and that in turn is going to put a lot of pressure on banks. And so the fear is that we could get one of those global financial crises that we had that just really wrecked the economy for quite a while. I believe it was 20 years ago now. Was it 10 years or 20 years? Getting all these disasters confused because we are, we are basically coming up in that period of time where, every 10 years there seems to be just something crazy that just distorts the economic system, and we seem to be in the middle of that now. Guys, we do have, of course, the Fed decision on Wednesday, July 27th, so just keep a lookout for that. I feel like, even though I've been reporting on this stuff for, basically 9 months now, right? Like, I feel like we've finally reached that threshold where every guru and influencer and, whatever in the land of crypto has finally caught up with this message. And so, really, only in the last 2 months did they all get on board with paying attention to what the Fed is doing. But I feel like this month, specifically this week, we've finally hit that critical mass. And I'm kind of wondering if that's some type of indicator in itself, like even the dumbest right, even the dumbest crypto influencer has finally caught up with this Federal Reserve news, whereas the intelligent ones at least pick it up, like 3 months ago, 4 months ago. But I just noticed like the last few guys, like the most dense ones, like finally started to mention the Federal Reserve, and so they're paying attention now. So that's good. That's good. Everyone's caught up, right? We can graduate hopefully soon. Okay, so that's just something that we're going to pay attention to. To be honest, guys, like once the slowest learners in the room like start paying attention to what's going on to something, it tends to be built into the market already. So maybe we've got one more pullback based upon, the Fed's interest rate increases, whether they go 100 basis points instead of 75 or whatever, okay? Like maybe we've got one more in there, but I think the market has pretty much absorbed the pain from the Federal Reserve. And, again, once like the dumbest, the slowest people in the room have picked up on what's going on, then it's going to be some some other narrative. It's going to be something else that controls the market, okay? And in that case, it's going to be the recession, in my opinion, and it's going to be more specifically currency issues, and it's going to be these different trade zones that we're going to have to watch out for. And so, yeah, I'll keep you updated on that stuff, of course. But basically, I think the market is getting to a point where the Fed can't really shock it too much more. And we're going to have to just absorb this last one. And then any further downgrade is probably going to be due to recession, and then maybe some type of strange things that can pop out of that, such as like maybe a housing crisis or whatnot. We do have just the same type of red on the board in stocks, and what can I say? Look, the tech sector has taken a hit today, right? And so of course, crypto is also going to be pulling back. I told you, a crypto trades like a tech meme stock, whatever the tech sector is doing. I've been talking about this for almost a year now, definitely over half a year, just mentioning just how this sector of the economy, crypto in general, it's just not independent from stocks. And you guys have to kind of like temper your expectations a little bit about, what it can do on its own. When the tech stocks, when the risky tech stock plays find their footing, only then will crypto find its footing, okay? It's not going to be some type of amazing decoupling or whatever, the libertarian dream is of, fetishizing crypto. It's literally just under the thumb of these, transnational globalist traders who, basically are in bed with the politicians anyway. So, that's just the reality of it, guys. So as long as you're trading crypto, you're really watching the stock market now. Okay, that's just how it is. We do have the earnings reports coming out for the various companies that are traded on the stock market, and so we are entering those time periods. Still got some outstanding, like July 28th, but then we have reporting by Google and Tesla and Microsoft. You can see why we maybe are having a little bit of a pullback. Of course, these earnings expectations are, going to be downgrading the value of stocks as they come out a little bit less than what was expected. Now, here's the thing, guys. Just like I told you that a lot of these guys, who in crypto, who are just kind of picking up on the Federal Reserve narrative, they finally caught up to that narrative. What they haven't caught up to yet, and what you guys are ahead of the curve with, is that the quarter three, not quarter two, we're looking at quarter two right now. The quarter three earnings reports are going to be what has that major impact, when it comes towards, September, October-ish, whatever, that time of the year, right? And so could we see the bottom of the market, not now, but in Q4 maybe, right? Like at the beginning of Q4, or maybe even Q1 2023. That's quarter four, quarter one, the last fourth of the year, or the first fourth of the next year. Could we see the bottom of the market then, as the prices of all these companies take major hits because of a potential recession in Q3 of 2022, and then it's reflected in the stock prices come Q3, Q4, and Q1 of 2023, and then and only then can we confirm the bottom of the market, if it comes along with a change in Fed policy. And so, people who think like this is just going to be over, and that, oh, we have a little bit of a relief rally, so it's the bottom of the market, it's a little bit Pollyannish, guys. I mean, maybe the most we could do is, kind of double bottom and go sideways for maybe half a year, something like that. That would be really possible. We would just have to have some amazing news to scream upward. Of course, we can have our relief rally. I don't even think that this relief rally is over. Personally, of course, we could continue to dump, but just because of how volatile the market is, right? The market volatility itself can send this thing and then dump this thing just as fast. And so, just keep in mind that when there's low liquidity and high volatility, that we can actually get some crazy moves, right? But that doesn't mean that the market has bottomed or that anything really interesting is going on. You can see it's just kind of like a heartbeat, right? It just shows that there's still life there. And this isn't how a market bottom is formed, okay? Like if it was, then this would have been the market bottom, right? So we need more time, right? We need more time to figure that out. And even this right here, right? That's not enough for a market bottom. Maybe that was enough to put in a potential run if we had good economic news there, but it wasn't enough for a market bottom by itself. When we talk about market bottoms, you really are talking about like this, right? Like this kind of accumulation, this kind of flattening out for quite a long time. And so guys who just think like it's going to be a couple weeks and then potentially we can go on a bull run, like you are going to be really surprised at just how long this market can go sideways, right? Which it could be something like this, right? Before the next thing. And yeah, maybe it will trend up. And yeah, maybe there'll be a relief rally here or there, right? That kind of thing. And so it could be pretty cool, right? I mean, it's not going to be like uninteresting or anything. But if you guys think that we're just going to go back to our old all-time highs, like anytime soon, it's just most likely not the case. I mean, maybe we could be talking about this, you know, maybe even in the best circumstances, maybe you could be talking about 40 to 50,000 just if you had something like crazy go on, right? Even if this was the bottom. But then again, this doesn't have to be the bottom, right? And it can do something like this, get everyone super excited, kill everyone again, right? Do a quarterly check back and then go, right? So this kind of thing is basically what you can expect as pretty normal for market behavior, especially as we're facing the next couple years where there won't be Fed printing. Okay, where the Fed really is not going to be able to turn on the money machine and just print like crazy. You may have to wait 1, 2, even 3 years before the US is ready to print money in substantial amounts again, right? Substantial amounts to cause, something to outstrip this movement. So if you guys are holding on to your coins from up here, I mean, I don't know what to tell you guys. Like I've been screaming, until my lungs bleed, man, to basically take your profits and get out of this stuff ever since 59K, right? Just because the structure was really ugly, and the Federal Reserve was changing its policies. So why would you stay in that market? Why would you advise anyone to buy back in to hold? That was insane. Like whoever was advising that, like that was literally insane. And so people had to, catch up. They had to learn what was going on. And then I think the hard reality, kind of kicked in around 47,000. And then we just plummeted to hell since then. Have we been shaken out enough? I don't know, guys. Like people try to like figure out where the bottom can be, but if you analyze like the history of Bitcoin and like different things like that, like it always turns around in the middle of nowhere. It's not like it just bounces off the previous high or bounces off of a little zone or whatever. Like it's almost always like in the middle of nowhere. And so could it come down to to what I think like 8,200? Uh Maybe, yeah. But could it just bounce wherever? Yeah, it can also just bounce wherever. Why is that? Because these things depend upon Fed policy. They depend upon the stock market. It doesn't depend on whatever you're just looking at in crypto, okay? Like it's going to do something else than what you expect. And so we're approaching the bottom of the market. We can say that we are approaching it. Just how much further do we have to go? That's all, right? And so congratulations, we're in the last third, most likely. Okay. Let's go ahead and like just check out look where we are here. Of course, we do see that that Alpha-9 knockout just continuing to play. That, of course, is that crossing on the weekly of that weekly 10 MA and the weekly 9 EMA. And where they cross, even when they cross bullishly, as they've crossed bullishly here, which again just means the slower moving average is underneath the faster moving average. The 9 EMA is faster than the 10 MA, and so this is a bullish cross, but the result is bearish. And I pointed out and I showed you exactly how it results in 10% to 30% drops, with the average being around 20%. And we've already had a 10% drop since they've threatened to cross, right? And then they did cross during the pullback. It always starts, around the threat of them crossing. So we had the 10%, pullback, and that could have been reasonable if this flattened out. If they had flattened out, then 10% is what you would expect if they flatten out. But if they continue to point downward, then what you can expect is 20% typically on average, and that's going to bring us down to around 19,200. That's not my prediction or anything like that. That's just what the average of the measured move would bring us to for this kind of Alpha-9 knockout, which is my cheesy kind of corny branding for this kind of setup that basically I'm taking as kind of like a little signature thing, because it does happen regularly enough that I think I'll start calling them out every time I see them, just to give a little bit of heads up. But that type of crossing, is how I knew that we were going to have most likely a 10% pullback. What I didn't know is that they were going to continue bearishly, because everything was looking pretty bullishly postured. And so if they continued, to this downward direction, then unfortunately the measured move is basically that 20%, not the 10%. And how did I define a standard for that? My standard was basically at the 10% drop, but it was also based upon daily RSI and daily MACD and these different things losing momentum, as well as the 2-day and as well as the 5 EMA having a negative versus a positive posture. As long as the 5 EMA kept flat or had a positive posture, I would have been pretty cool with whatever that pullback was, just seeing it as a chance to buy in a little bit more. You can see on the lower time frames, it's basically just a bull flag, right? But the thing is that as soon as you start violating certain levels, the momentum shifts to the downside, and that's where you can get dragged down significantly. Now, this doesn't have to go 20% down. Perhaps the bulls can step in. Perhaps the stock market has kind of a turnaround. Perhaps there's good news in the market and maybe it cuts it short. Sometimes we see like just a 15% pullback. So that would be more in line with like that 10% drop. And maybe, maybe something like a 20,000, right? Maybe something just around here on the mid channel. And that would be, I'm just guessing, yeah, that would be around 15%. So if we do have something like that, then that's also highly possible. Or if we recover this kind of like $23,000 area, if we can recover 23,000, then perhaps we could say that it's over. But as long as we're just kind of drooping down, sloppily, like pushing down like this, you can see that we're in a squeeze play to the downside. And when these type of setups happen, I'm on the 4-hour right now, you can see how they just get all under all the EMAs, and whether that's going to bottom out here or whether it's going to bottom out at the measured move for the average move, right? Doesn't mean it has to happen, just the average move. Then you could perhaps see something like that. Now, if we did maintain this trend line, that would be pretty good because somewhere around 20,200, because then at least we could have an uptrend. Or if we respected that 19,200, then we would have kind of a double bottom here. And maybe we would just build in some energy to perhaps go and reclaim that $23,000, $24,000 area. And if we can reclaim that area off of some good news, right, then perhaps we can complete the rest of the move that we were predicting to that $27,000 area, which is suggested by. Actually, there were a whole bunch of things that were suggesting. I think there were at least like 3 or 4 major indications that we could get to 26 to 27,000, and so we could perhaps complete that move where everyone's going to probably be freaking out that we're going to go lower. There is the possibility that we catch support there, because again, it was a bullish crossing on the weekly. It wasn't like a negative crossing on the weekly. It's just that the bullish crossing results in like temporary pullbacks, right? Now, there are overall forces in the market that could continue to drag us down. So we are dealing with probabilities. We're not dealing with calls. Like no one makes calls really in trading. Um, sometimes it's easy to say something kind of cheesy like, "Oh, I called that" or whatever, but when you're dealing with honest people, they're just talking about probabilities. Like, and the best kind of call is that there's like a certain percent likelihood of bouncing, a certain percent likelihood of dropping, and we don't know which one it is, but because it has a higher likelihood of this, I'm leaning towards that direction, right? Uh, and now, somebody could say like, oh, I called it whichever direction that it went, right? But in reality, we're just talking about, oh, the probabilities working out. So be careful of people who just say like it has to go up or it has to go down, right? Like especially if you're a new trader, sometimes you look for somebody who has a clear setup on their screen and they say like it's going to do this, right? And that gives you confidence, and their confidence like maybe helps you trade in the beginning. But you just have to understand that we're dealing with probabilities. We're not dealing with absolutes. None of that has to work out that way. And so if they're not telling you what the risk is to the downside or how they would put a stop loss or something like that, then it's really negligent in a way, right? So that's why I always mention to everybody, take your profits, put food on your table, don't collect coins, use your money for your life. Collecting all these coins isn't going to do anything for you, and they can all go to zero. They can all, just lose 80% of value within a short period of time. And so always be taking your profits, always be selling, and and use stop losses. Okay, if you're entering trades that where you're consistently a trader, where you're succeeding 50% of the time, at least a little bit more than 50% of the time, and you're taking trades that have a higher probability of working out versus ones that are kind of 50-50, then on average you're going to come out ahead, right? That's why you don't full port anything. You shouldn't, put your full portfolio, you shouldn't risk it all into any one trade, because if you did lose and you didn't have proper risk management, then that could have been the time that you just lost everything, right? But if you have a consistent history of very, very small trades of winning more than 50% of the time, and then you're finding setups which are successful, more than 50% of the time, preferably more than 70% of the time, if you can, reach those type of levels, right? Which is different than trading, right? Because trading, you're dealing with your emotions. You're actually the one pulling the trigger. The setups can be ideal, but the question is, can the human being enter at the ideal moment of the setup, or are you a little bit late on entering because you're a little bit nervous and you want to see it moving in that direction before you buy in, right? Like buying at support, selling at resistance, right? Do you want to see it bouncing at support? So if you want to see it bouncing at support, then you're obviously going to be buying in a little bit higher than support. So trading is different than the TA, right? And guys, anyway, the key point here is that there is a chance for us to still break down on the macro, just like we've been doing here and here and here and here and here, and basically every single point up this mountain, right? Or down this mountain, I should say. And if we do get one of these kind of like peaks, one of these, mean reversion peaks that just kind of touch back on our higher EMAs, then even then we could continue to dump. Okay, so again, just ground yourself and understand what we're talking about, that this is just probabilistic, right? It's just probabilistic that as we start to accumulate, certain types of bullish crossings, especially on the weekly, right, where we have this kind of bullish crossing right here, and as we potentially get above the 200 MA, right, that we could have these chances to pop. But if we lose the 200 MA, we lose the 5 EMA, again, like we could just get pushed down. So we are in a critical zone right here. The moment that we're in right now is really, really important on the macro, and where we bounce and how high we bounce off of, whatever low we end up putting in, that's really going to change our fate completely. So don't let anybody who is making calls with a high degree of personal confidence distract you from your risk management. Okay, your number one job is risk management. It's not to feel confident in a bullishness or bearishness. Okay, it's to it's to protect your capital, so that if we do have an extended bear market, so if we do go lower, that you have the ability to buy in lower, right? Don't make the mistake the guys at the top made, where they just thought we couldn't go lower. They just thought it's only up only from here. Well, you could have that same mindset down here, right? I mean, you are at a much better risk point, but you could get locked into that same type of mentality. So just watch out for that stuff. I think you understand what I'm talking about in terms of Bitcoin. I think maybe it's good to perhaps put it in the context of Ethereum, since everyone's watching Ethereum right now. Let's go ahead and jump over to the Ethereum CME chart, which of course I had been suggesting that most likely we would fill this gap, and then there would be a high degree of likelihood that once we completely filled the gap, that we would get rejected and perhaps go down and fill this gap. Let me turn off the EMAs, where you can see, if I just move this purple box, you can see there's a gap in the chart here. And so as Ethereum has broken down and then tried to recover and is now breaking down again, just my prediction is that it would come down and try to fill this gap perhaps, and maybe catch support down here. Does it have to happen? Could it just pop back up like crazy? Yeah, but again, like this is just a likelihood that this is a bearish breakdown of this formation, especially if we get a little bit lower here. It's just probably going to reclaim these kind of institutional candles, probably fill this gap, and then we can see if it catches support on this diagonal or on this horizontal, which of course I already mentioned in a couple previous episodes. So it is nice to see that it is playing out what we discussed. Just you have to understand that it didn't have to play out that way. We could have gotten a bullish bounce. The market could have been green today. Just the setup was a reliable one for a potential breakdown, and we are now increasing the likelihood that it's going to break down further. And with this gap here, that's going to be very tempting for the professional traders to fill this gap. Okay, it's just something that traders do. They fill the gap. They go for the gap. Everyone believes the market's going to go for the gap. That's just how traders think. And so they go and they fill the gap, and then they decide what they want to do from there. And in this case, they filled this gap, and they decided, well, we're just going to take it back down. Maybe we were a bit enthusiastic here. Okay, like it can be actually that simple. Okay, it can be because these gaps act as support and resistance. They don't just if you're just looking at Ethereum on its own, you might not really see that this was basically a gap that needed to be filled, right? You might think that, okay, yeah, there's a chance that we could get rejected here or something, but you wouldn't really think that this right here was a gap that needed to be filled, and then maybe we could turn around from there. You might think maybe we're just going to attack this area or go to the moon or something like that. And it is possible, but once you take a look at the professional exchange chart, you can see like there is something very tempting to go after right here if we do have a breakdown or have any sign of weakness. There's kind of a really juicy kind of goal right here where the bears, sensing that a lot of people might join them to try to fill this gap, that they might want to take charge of the market and then give the bulls a second chance, right? Assuming that the bulls can pick up momentum or whatever. But if it breaks down, then of course we could be talking about the bottom of Ethereum's channel as well. I think that's good. We can just end that there. That was your alpha for the day. Stay safe and happy trading.